Joining me now, Jordan Trimble, President and CEO at Skyharbour Resources. Great to see you as always.
Always a pleasure to be here. Thanks for having me.
Yeah, you're here for PDAC.
Yeah.
We just had pre-PDAC, PDAC with Red Cloud, and we talked at VRIC about 5 weeks ago.
Yeah.
So we're going to get a nice little update from you. And we know that recently you struck that big deal with Denison for joint ventures at Russell Lake. And you've got an exploration program going on there. You've got some drill results. So can you maybe walk us through the current program, some of the results so far, and what the goals are overall?
Yeah, so that deal we struck with Denison, obviously a major transaction for us and our major development, $61.5 million option joint venture with Denison. We basically split the project up into 4 separate sub-properties. Denison's got to spend $40 million in exploration over the next handful of years to complete the earn-in and additional cash payments as well to Skyharbour. Now we've just started with them. They're the operator at the Wheeler North claims, which are the claims directly proximal adjacent to Wheeler River. They've started a 7,500 meter drill program this year. Initial winter phase of drilling underway. We are planning to drill at our 80% owned RL claims. That'll commence in the next few months. And then we also have another 3,500 meters to 4,000 meters of drilling at the Getty East claim, which is another part of the broader Russell Lake project. So collectively, you're looking at over 15,000 meters of drilling across this property. And as you recall, one of the reasons that we did this transaction, one of the main rationales behind doing what we did, reorganizing the project into 4 sub-properties, was such a big property, 73,000 hectares. So we needed to break it up into more manageable, bite-sized pieces, if you will. And now with Denison is, quite frankly, the best partner we could ask for at the project, given they're building a mine right there. We have the right partner. We have funding coming in from Denison. And we're very, very confident that this year we'll be able to basically carry on with delivering high-grade results. As you remember, we have drilled up to 3% at the project at what's called the Fork Zone. So Denison actually is going to be following up on that target this year, as well as drilling a number of other targets on strike with a number of high-grade zones on the adjacent Wheeler River project. So very excited for the work that's now commenced at the Russell project. It's several sub-properties now, and that'll generate a lot of news flow going forward. And one final note and reminder, this project is it's very, very low cost drilling. We're able to drill there with the road, with the access, with the power lines, with the exploration camp at less than all-in Canadian $400 a meter. So we get a lot of bang for our buck at this project, drilling at relatively shallow targets as well.
All right, great. And then, Jordan, at Moore Lake, you're doing some drilling as well. High-grade step-out holes, which we've talked about before at Maverick East Zone. So what is the team learning about the scale and the continuity of mineralization?
Yeah, look, Moore Lake is a project that continues to deliver for us. We've had it in our portfolio for a number of years. It's remained as one of the co-flagship projects in the company now for better part of the last decade. We've had grades and drill results as high as 21% U3. In January, we had just announced additional high-grade mineralization, almost 12% over about 1.5 meters. And it's relatively shallow mineralization. That's a key feature here as well. Is it's within 300 meters of surface. The Maverick zones of high-grade mineralization. It's open along strike and at depth. It's really only been systematically drill tested for a few hundred meters east to west. There has been more drilling along that 5-kilometer long corridor, but there's still several kilometers that haven't been systematically drill tested, and that's really just drill testing down to the unconformity. So there's a lot of potential as well in the basement rock. So we're going to continue working at the Maverick zone, several zones of high-grade mineralization. But what's exciting for us this year as well at the Moore Lake project, with 8,000 to 10,000 meters fully funded, that'll be over several phases of drilling throughout the year. We are going to be testing some of the regional targets as well. One in particular called the Nomad Zone, where we drilled a couple of exploratory holes late last year, and we were very, very happy with what we were seeing early on in the drilling at that target. Now, this is a few kilometers away to the southwest of Maverick, and we think it's on that same conductive corridor, so we know it's a high-grade uraniferous, fertile conductive corridor, but it hasn't seen much drill testing. The conductors were poorly defined, and so we did some geophysics there. We've now honed in on a target that we think could deliver a new discovery. So a lot going on at Moore Lake as well as at Russell. In total, we'll be drilling about 25,000 meters or so, plus give or take 2,000 or 3,000 meters at those two projects. So a lot of news flow between those two co-flagship assets of ours.
Right, so those are the two co-flagships, Russell Lake, Moore Lake, and then as we've talked about many times before, you've got so many joint ventures. Maybe you can zero in on a few here. Orano at Preston project, and then Terra Clean Energy at South Falcon East. How's the progress coming along, and what do the programs look like?
Yeah, so I mean the most current or recent joint venture option agreement that we signed was with Denison and Russell. We talked about that $61.5 million combined project consideration option JV with them at Russell. Orano is planning another 3,500 meters of drilling at the Preston project, and we're quite excited for them to get back to work there. We are going to fund as a minority interest holder at that project. We've also consolidated the ownership in that project. We had a third partner, which we acquired their minority interest, us and Orano, so now it's split 75-25 with Orano as the majority holder and operator. And given what you're seeing happening in that that part of the basin on the west side, you've got NextGen drilling and making additional discoveries east of the Arrow deposit. As you keep stepping out to the east, there are these conductors that trend, these corridors that trend onto our Preston project. So again, very excited to be working with Orano at that property, and looking forward to the drilling that we're going to carry out later this year, as well as some additional geophysics and groundwork that they're planning to do. So that's one to keep an eye on. The other one, a couple others that we are expecting drill programs and exploration programs at this year. Terra Clean Energy at our South Falcon East project. They're going to be following up on some drilling that they carried out the last few years. There is a small deposit, the Fraser Lake Zone B deposit. They're going to look to continue to expand that deposit, as well as try to hone in on some high-grade mineralization around the deposit. North Shore at our Falcon project, we're expecting some exploration, some work from them as well. And then we have a couple of newer partner companies, Hatchet, Uranium. It's actually being acquired by Future Fuels, which is a publicly listed company.
Oh, okay. Is that fairly new?
Yeah, and that it was just announced in the last week. And so we have an option agreement with them at one of our properties, the Highway project, and we've sold them a couple of properties as well. So that's going to be vended in to Future Fuels. So we're looking forward to working with them as a partner at those properties going forward. UraX, which is still a private company looking to go public, they actually completed some drilling at our South Dufferin project last year, and they do have plans to follow up on that work. And then last but not least, Mustang Energy. They carried out some work at the 914W project, which is a project we've optioned to them, and they are planning some additional work this year. So all in all, there's a handful of partners, half a dozen or so of these partner companies that will be funding work this year. Again, generate lots of news flow, provide some additional optionality value for our shareholders, and also helps us keep the equity dilution down, because we do receive these cash payments annually from these partner companies. So when you add up all of those expected drill programs this year from the partner companies, in addition to what we're doing at Russell and Moore, and at Russell with Denison, we're looking at well over 30, potentially 35,000 plus meters of drilling, combined drilling. So one of the largest combined programs of any company operating in the basin this year.
That's great. Lots of news flow obviously coming. So a couple more here for you. Let's look broadly at the uranium sector. We've talked about the tailwinds. It sort of goes up and down, but generally positive, generally bullish. What do you think about that? And then we'll ask you about catalysts specifically for the company.
Yeah, look, we just had the news in the last few weeks of a couple of major long-term contracts being signed, one with Kazakhstan and India, and just in the last few days here with Canada and India, and Cameco in India. So, that just shows that the long-term contract market is quite robust. We saw this trend really kind of ramp up in Q4 of last year, where the long-term volumes picked up quite drastically right at the end of the year. The first three quarters of the year, it was they were kind of on the lower end, but we saw in Q4 of last year pretty rapid pickup in the volume of contracted material, and that's a key thing to watch. We want to see how much material is being contracted. What are the volumes? When we see that replacement rate of about 180 to 190 million pounds of contracted volumes, that's a significant indicator that we're in, I think call it the mid to later stages of a bull market. We haven't seen that yet, right? So that's another, I think, important thing to note, is that we're still, I think, in the relatively early days of this bull market. So that's one, and it's looking good so far this year. The spot price oscillates really around that long-term price. So we've seen the long-term price continue to move higher, about $90, $92 a pound right now. The spot price, we've seen it kind of move between low 90s to low 80s, trading around $85, $86 a pound. I think this year the stage is set for another significant breakout. And another thing that I think maybe gets lost on uranium investors sometimes is the fact that when you have a real, true, bona fide bull market, as we have right now with other commodities, with precious metals, gold in particular, that does spill over. If you look at the previous cycles, when you have a very strong commodities complex, and in particular when the price of gold is moving, and you have a bull market there, you do see, again, that kind of spill over into other sectors, other metals, and I think we're going to see that this year. So a combination of a healthy, strong commodities bull market coupled with the specific underlying fundamentals for uranium, major structural supply deficit, and increasing volumes, long-term contract volumes, I think that'll be a key driver for the uranium price this year.
And this lastly, I'm curious about the stock of Skyharbour. It's done well. It always seems to sort of be in a range. And do you think there's a disconnect, or it's underappreciated considering the co-flagship that you have and all the partnerships and all the possibilities for discovery? Do the markets still not quite get it? We quite haven't seen that sort of breakout.
Yeah, there's a couple of key catalysts that would change that. Obviously, drill results being the main one, right? One drill hole can turn a $110 million market cap into 250, 300 very quickly, as we know. So that's, we offer that kind of return potential at Russell, at Moore, and with our partner companies, right? You got all these, different partners that are drilling, and if one of them hits, it probably adds, some multiple to our current market cap. So that's one. I think the market does maybe underappreciate, undervalue the prospect generator business, which isn't unusual. If you look at other, we're not a pure play prospect generator. It's important to note that we are a hybrid. We have a hybrid model, so we are an exploration company with a prospect generator business within it. But the prospect generator business, we've got 10 partner companies now spending over $118 million in combined project consideration, more than our current market cap, or around there. So I think that if we saw the value crystallize within that part of our business, that would lead to a higher valuation. But as you know, most of the time investors are looking for those the big drill results, right? And so our philosophy on that is we want to have as much drilling as we possibly can, and a good metric to look at is enterprise value or market cap per meter or per hole drilled. And with Skyharbour this year with over 35,000 meters of potential drilling, expected drilling across our project portfolio. A lot of that being funded by partner companies. The value proposition, given the size of the company, the valuation of the company, and how much we're drilling is very, very compelling.
Mm-hmm. So that how does that number compare to peers?
We're in the top based off of our number crunching. We're in the top 3 in terms of companies that you could look at. And from a value proposition standpoint, so relatively small market cap or enterprise value for the number of meters that you're getting exposure to.
Right, so it's all about the work that the company is doing and just having patience, and then you wake up one day and you never know.
Look, we've got absolutely, and what's exciting right now is now with the deal done at Russell and with the programs kicking off at Russell, now we've got, you think about it as having basically 3 tracks of news flow coming from Russell versus just one. We've got Wheeler North, where Denison's operating, they're funding Getty East. We're operating Denison's funding, and RL, where we're 80%, Denison's 20%, so we're operator and we're funding the majority of it. But it's now 3 properties that'll be generating news flow and the potential for major discoveries to happen, as well as our 100% owned Moore Lake project, as well as the other partner-funded projects.
Always a great update. Thanks, Jordan.
Thank you.
Okay, good stuff. Jordan Trimble, President, CEO, Skyharbour Resources.